Welcome to my channel. This is Bruce the Boss Resurrected, and today's topic is Wells Fargo closing its personal line of credit for its consumers. And is this a sign of bigger things to come in terms of the economy and potential downfall? By the way, I am rebuilding my channel, or this is a brand new channel after YouTube nuked my previous channel for daring to question some of the narratives and reasonings behind some of the pandemic restrictions, etc., as well as the jab. So I'm starting fresh, brand new, only 1 week out now. So feel free to go ahead and smash on that subscribe button, as I'm pretty sure a massive number of you viewing now are first-time viewers to this new channel. And if you're finding me again, welcome back. Smash on that subscribe button, as well as the notification bell to get notified of my latest content as I work on rebuilding this channel. Like this video, comment on this video, let's roll.
This was big news when it dropped yesterday. This is an article here I'm reading from The Hill by Celine. And it goes on to read that Wells Fargo has begun to inform its customers that they'll no longer be offering personal credit lines, with an existing lines being shut down in the coming weeks. The revolving credit line had been a popular consumer lending product, allowing their customers to consolidate higher interest credit card debt, avoid overdraft fees on their checking account, as well as other actions. The credit lines usually allow customers to borrow anywhere from $3,000 to $100,000, according to CNBC. Now, I remember when I worked in the bank, yes, this was a very popular product because it allowed, like I said, individuals to avoid overdraft fees, for instance, by having that line of credit attached to their checking account. If they were to overdraw, it would just pull from the line of credit. So this was a very popular way of lending money to the consumer base. Now, the question is that I'd like to raise is, with this action now, I know that Wells Fargo has a lot of bad practices and a bad history, so this should be of no real surprise, because it was just about 5 years ago in 2016 that they were caught opening accounts without a lot of their members' knowledge, just opening out extra accounts from existing members and then applying fees for said accounts. I can only assume for the personal bankers who were trying to meet their quotas for each quarter, and they got fined for that, and I believe they had to settle $1 billion, and they were forbidden by a judge, according to this article here. It also talks about some of their past woes. So how in 2018 the Federal Reserve imposed an asset cap on the bank to limit its ability to grow its balance sheet until it addressed the improper accounts and practices. So they have had some levies hit against them for said improper practices. But is this also a bigger sign of things to come in terms of the economy if you don't look at this in the vacuum, but rather the bigger picture? And what I mean by that is when you consider the fact that I believe the June's job report just recently came out in the past couple of days, and it showed that while a massive number of jobs were created, the unemployment rate or percentage still increased to almost 6%, I believe 5.9, because despite the massive number of states that have already reopened up, and for a number of the other states, I believe mostly led by Republican governors, that decided to put an end on the $300 additional federal unemployment benefit, therefore incentivize their people to start working. That ended in June in 32 of the states. So that will help increase the job numbers, but you still have another 28 states that still continue with the federal unemployment assistance benefit, which is leading to not a worker shortage, because we have the workers out there, but rather a worker strike and individuals who are refusing to enter back into the marketplace because they're getting paid just as much to stay at home in many cases. We have a shortage in gas. We're seeing not only gas prices rising, but we also have a shortage in getting the supply of gas that's out there to the various gas stations or fueling stations, because over 25% of the previous fuel tank truck drivers have all either quit or retired, and those positions have not been filled. And then on top of that, the Biden administration cancels the Keystone Pipeline, which would have helped get fuel from across the continent into a lot of the other gas stations a lot easier amid the trucker shortage. But that's been canceled. So we have a gas shortage. We have food shortages. We're seeing increases in prices for various meats like bacon and like chicken. Try going to a Wingstop. Wingstop is in the name. And not only will you see at least a 25% increase But you see companies like Wingstop is actually trying to change their name, not officially, but just like an online promotion, calling themselves Thigh Stop in order to promote chicken thighs as opposed to the shortage of chicken wings itself. And speaking of rising prices, we're seeing massive inflation across the board. Will we be headed to hyperinflation? Probably not, but we are seeing the value of the dollar dramatically tank. So with everything going on from inflation to food shortages, gas shortages, I believe there's even an article here that grocery stores are stockpiling food and cleaning supplies across the board. So grocery stores across the nation are stockpiling food and other items in anticipation of the rising costs and demand and the lack thereof of supply, because again, we don't have enough people to help produce the food to get them to the supermarket. So we're about to see a massive food shortage and or a massive inflation across that spectrum.
So when you look at everything as a whole, again, consumer lines of credit is being closed, at least at Wells Fargo. We're seeing that jobs are not disappearing, but people are not actually out there working. We're seeing massive numbers of businesses closing. We're seeing requests to forego foreclosures as individuals are unable to pay their rent or mortgage. And what's going to happen to those landlords and or those banks and their institutions that hold the loans for the mortgages for individuals who aren't able to make their mortgage payments or still aren't? We're seeing massive inflation across the board, whether it is in the cost of foods, gas, homes, and or supplies required to build the homes, wood, etc. Hence why there's another housing shortage. Just isolated incidences, or are these things or signs that we need to watch out for when all put together of a potential economic collapse down the road? That's the one of the things that I'm really worried about, and especially with the Feds withholding actual increases in interest rates. What's going to happen when they can't stop the bleeding anymore and have to actually tack on massive interest rates, especially as the value of the dollar potentially decreases? So that's my video. Like this video, comment on this video, and subscribe to the channel. This is Bruce the Boss, and I'm out. Peace.